Al, as we talk about this leverage, in the last segment, we have multiple leveraged assets. So you got into futures, what that was, and just kind of scratch the surface of options. But there's another asset which so many people love to trade and invest because of that leverage and the 24-hour markets, and that's that Forex market. Right. It's the foreign exchange market. That's basically your currencies. So why do people really gravitate towards that market, especially people that work during the day? The great thing about that is it's a lot of people like to use it in their retirement accounts as well. So get into what the Forex market actually is, how it functions, and how our listeners might be able to utilize that, whether in their shorter-term income years, but especially in those longer-term strategies.
Yeah, the foreign exchange market, that's really where you're looking at the difference in exchange rates between two different currencies. A lot of you listening have actually participated in that market. If you've traveled out of the United States and you've ever exchanged your dollars, say, for pesos or whatever the monetary denomination is of the country that you're going into, you're doing the same thing. That's exchanging your currencies for one currency for another. And then typically when you go back to the United States, you maybe will exchange your pesos back for dollars again. The big institutions do that on a regular basis because the big ones that are international in their business, because they have to. The currency can have a big impact on their bottom line, on their profits, on their forecasting, and so forth. So that was an industry really built for the big players, but we can use it. We can use it as investors, both short-term and long-term. And that's really is the versatility of that market. It's open 24 hours for one thing. It has basically 50-to-1 leverage, which is a great use of every dollar that you have. That's great leverage that can go in your favor.
So when you say
used properly,
when you say 50-to-1, what does that really mean?
It means each dollar can control as much as maybe $50 worth of an investment. There is a margin account that you set up. There's a margin amount that needs to be held in that account to be able to trade these assets. But it may only be a small fraction of the overall investment. That's where you get that potential for the increased rate of return. Again, the 24 hours gives you some great versatility there. Foreign markets are open round the clock, so you have the opportunity to trade when you feel like it, when you have the time to do it. You've got that great leverage. Some of these, the currency pairs, there's a long-term trend there, which means you can use it longer term in your retirement accounts. Yeah. You can maybe do it for swing trades, shorter term trades.
Yeah, if you think about it, the reason because of that is it's based off monetary policy.
Correct.
Right? Mm-hmm. When countries are changing or not changing their monetary policy, they have to keep that in consideration because there's companies doing business in those countries from somewhere else. Yep. They can't change that very fast because it'll affect that company doing business there. So that's why a lot of people like to utilize that as a longer-term strategy because they do trend very well.
You're right. And then the other thing, when you have a market that's open 24 hours, one of the problems with the stock market is that there is a potential for what we call gaps. In fact, this happens often during earnings season. Earnings always come out after the market closes or before the market opens. If a company comes out with really bad earnings, let's just say it closed on Wednesday at $100 a share. After the market closes, earnings come out, and they just totally miss the numbers. It may open the next day at $50 a share or $60 a share. There's that gap down because the market is not open during the night. The futures market and the foreign exchange market are open 24 hours, so you really minimize the potential for that gap to happen, and that can be an important thing for traders. And then you also have a great opportunity to use this as a way of diversifying your assets.
Yeah, you're right. It's all about diversification, especially in retirement accounts. So having other currencies, that's not going to be correlated to your stocks or some of your commodities even. So Al, we're talking a little bit about this longer-term strategy, and that's what a lot of people like to use in retirement accounts, just based on the fact that people don't want to trade every day. And that's just so our listeners understand. Online Trading Academy, our sponsor, teaches short-term strategies, but also longer-term strategies as well, which are designed to teach you to make better investing decisions no matter what your objective is. So if you're looking for short-term, they teach that. If you're looking for long-term or retirement, which is what we're seeing a lot of people come into these classes for right now, they teach that as well.
Yeah.
But we're seeing people want to self-direct their retirement accounts because, I mean, people should be the most wealthy they've ever been right now based on the stock market, right? Mm-hmm. And that's really not happening for some people. And a lot of that is because of those fees that come along when they have retirement accounts. Why is it imperative to self-direct and really be the best steward of your retirements and do that yourself?
Well, one of the things that happens over the course of your working years while you're putting money away for retirement, that's kind of your long-term part of your financial life, there's a hole in that financial bucket, and money is leaking out of that hole. It's being sucked out. It's sort of like someone who's got a vacuum cleaner and they're drilled a hole in the bottom of your portfolio and they're sucking dollars out. How can that happen? Well, that's what happens with fees. And if you are in mutual funds, in a 401k or 403b, whatever the employer-sponsored plan is, they're charging fees. There's a manager or a group of managers that control those funds. There is also a fee being charged by the plan sponsor. There are maybe 15 to 17 different fees that can be included in some of these retirement plans. Most people will never know what all of those fees are because it's almost impossible to find them. But it's causing you to lose possibly 40 to 60% of what you could have in retirement simply because of those fees being sucked out.
But how is that possible? Because most people are told, oh, it's going to be a 0.25% management fee or a 0.75% management fee, which doesn't sound like a lot. But is that really all it is?
Well, that's one fee. As I mentioned, even according to our government, there can be as many as 17 fees in a 401k.
Did you say 17 fees in a 401k?
Correct.
That's crazy.
Yeah, and maybe not all of them have all those fees, but you got not only the marketing fees, you've got transaction fees, legal fees, administrative fees, soft dollar fees, revenue sharing fees. The list goes on, and it's being taken out of your accounts on a regular basis. So that's one of the downturns, and that's one of the reasons that people see this market doing so well, but when they look at their portfolios, they're not seeing the numbers. You participate in a fraction of the upward movement, but the problem is you're open to as much as maybe a 40, 50, 60% drawdown when we go through a correction. So you're looking at maybe getting 4 or 5% on the upside, but with exposure to 50, 60% on the downside.
So with all that added up, what are some potential fees? I mean, a lot of people think 2%. Is that pretty common? Or
2% is a number that is thrown out a lot. It's used in a lot of the examples, but 2% can actually be on the short side, on the low side. When you look at all of the fees, when you look at the plan sponsor fees, it can exceed that by maybe double that or more. But the point is, you started to talk about this earlier, is getting rid of those fees, self-directing. If you have a self-directed IRA, then you can eliminate those fees, and you also can add assets to those accounts that you can't use in your 401ks. And as you mentioned earlier, the Online Trading Academy has classes on all of those different assets. Whatever your goal is, whether it's long-term, short-term, whatever your needs are, and education can be kind of customized to help you achieve your goals.
Yeah, and if you feel like you're not sure of what those fees are, you don't even know what you're losing or missing out on, now might be that time because, like I said earlier, hopefully everybody is the most wealthy they've ever been. But if things turn around, that could be a totally different story. And if you're amplifying any losses, that's devastating. Now, coming up next, last week we did a little market update on the last segment, and I want to do that again today based on what's happening in these markets. So our listeners understand there's opportunities no matter which way this market goes. So a market update next, but also how to get started trading investing if you're brand new. This is Josh and Al, Investing with Confidence. We'll be right back.